Hey everyone, it is Julie and welcome to JT Wealth Investing 101. In today's video, we are taking a look at the 5 main different types of stocks. So here we go. Today, we are looking at the 5 most common types of stocks that you will come across in investing. So we're going to give you a quick definition and example for each to help you understand what people are referring to. Now, the 5 stocks that we will be looking at: blue chip stocks, growth stocks, income or dividend stocks, value stocks, and penny stocks. Starting off with blue chip stocks. Now, blue chip stocks are basically huge companies that have excellent reputations. These are very well-established companies that have operated for years and have very dependable earnings. These blue chip companies are often leaders in their sectors and therefore are often a household name. Now, the term blue chip stock actually comes from poker, as the blue chip traditionally holds the highest value. And this can be same for these stocks, as they can often be a bit more of an expensive stock, but typically offer more stable and predictable returns. Blue chip companies also often pay a nice dividend as well. Examples of blue chip stocks include companies like Procter & Gamble, Johnson & Johnson, or Walt Disney. Next, we have growth stocks. Now, as the name implies, growth stocks are expected to grow at a faster pace than the rest of the average market. Now, growth stocks can sometimes look a bit more expensive, as people are willing to pay a premium for those expectations of higher growth in the future. Growth stocks typically don't pay any dividends, as the company is reinvesting any of their earnings back into themselves for that growth. Growth stocks typically have a competitive advantage based on their innovative new products or services, but they also can be very volatile. Examples of growth stocks include companies like Amazon, Facebook, or Netflix. Next, we have dividend or income stocks. As the name implies, an income or dividend stock is any stock that regularly pays out a dividend to its shareholders. Dividend-paying companies are often well established, but maybe just don't have much further to grow, so they have less of a need for that excess capital to reinvest within themselves, so they pay out some of that extra cash flow from their profits to their shareholders. Their share price is not expected to grow by great amounts, but does offer some stability. As I mentioned with blue chip stocks, they are often also dividend-paying stocks. So examples of these are companies like Johnson & Johnson, Coca-Cola, and Colgate-Palmolive. Next, we have value stocks. Now, a value stock is when a company's share is trading at a lower value than what you'd expect based on their fundamentals. People looking at value stocks believe that they are getting this stock at a bargain deal, as the market will eventually correct itself and it'll begin trading at a more reasonable value. A value stock will typically come from a mature company that even has a stable dividend, but is maybe temporarily experiencing some adverse events. Examples of value stocks could be Ford, Verizon, or Rent-A-Center. And lastly, we have penny stocks. Penny stocks are stocks of very small companies that trade under $5 per share. Now, penny stocks are inherently very risky, and they also often don't come with much volume of trading, so it can make them really hard to find buyers for, making your investment less liquid. Now, there can be sizable gains in penny stocks, as it doesn't take much for their price to shoot up, but at the same time, there is an equal chance of losing all of your money, as these are very risky. There can be limited information available on some of the companies behind these penny stocks, and those companies are more likely to go bankrupt than some of the bigger, more established companies like blue chips. So there we have 5 of the most common stock types out there. Now, yes, there are some others such as defensive, cyclical, or speculative, but we will get into those another day. Now, if you found this helpful, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Thanks so much for watching, and we will see you next time.